The Indian rupee has been sliding and not by a little. In 2025, it's down about 3% against the US dollar and much more against other major currencies like the euro, pound, and yen. Now, normally when a currency falls, it's seen as a sign that the economy is in trouble. But that's not what's happening here. India's GDP is growing at 7.8%, inflation is below the RBI's 4% target, and the current account deficit is only 1% of GDP. Plus, India's foreign exchange reserves are a massive $700 billion, enough to cover 11 months of imports. So, if the economy is strong, why is the rupee weak? The answer lies in global money and how investors are feeling right now. In 2025, foreign money coming into India dropped sharply. Net capital inflow so far this year is just $2.25 billion, only 0.1% of GDP. That's a huge fall from normal years where it's 2 to 2.5% of GDP. Foreign direct investment, FDI, is almost flat, only $1 billion this year compared to $40 to $45 billion a few years ago. And foreign portfolio investors, they've pulled out about $16 billion from Indian markets. Then there's geopolitics. President Trump's trade reset hasn't exactly worked in India's favor. Instead of getting tariff relief, India now faces one of the highest tariffs, 50%. And changes to H-1B visa rules and the proposed Hire Act are adding to trade uncertainty. Together, they've made global investors nervous, and that's showing up in the rupee. So why isn't the Reserve Bank stepping in more aggressively? Between April and August, the RBI's forex interventions averaged $11 billion a month compared to $63 billion a year earlier. Basically, the RBI is letting market forces play out while keeping its $700 billion reserve ready for any shocks. For years, the rupee stayed stronger than most other emerging market currencies. Now it's correcting that gap. The real effective exchange rate, which compares the rupee to its trading partners, shows it's actually undervalued by about 4%. So yes, it's fallen, maybe even a bit too much, but that could mean it's near a bottom. For ordinary Indians, a weaker rupee means imported goods, from oil to iPhones, get costlier. But for exporters, it's a small boost as Indian goods become cheaper abroad. The rupee's fall this year isn't a verdict on India's economy, it's a reflection of how global money is moving. India's fundamentals are strong and the central bank still has plenty of firepower. So while the rupee may wobble for now, the story isn't about collapse, it's about correction.